everyone, welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of October the 1st, 2018. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, the dollar has moved higher as previously forecasted in last week's Outlook. However, my optimism on further US dollar gains remains somewhat guarded at this time. We've had a very steep rise up after the Fed announcement, but we can see here in this yellow shading around the VantagePoint indicator that there's still a little bit of indecision here. Now, the reason I say that is that the Fed was very mixed in their comments. They're hiking, they're not hiking, economy's good. It's a little wishy-washy, to be perfectly honest. So with that said, the market still has to digest what the Fed means. On top of that, we've got the non-farm payroll this week. So there's going to be a considerable amount of volatility still in the market here. With the dollar, it's poised to make some gains here. But again, if we look at our short-term crossover, looks good. Medium-term looks good. Our long-term crossover is struggling just a little bit here. Now, the position of the predicted RSI still has room to extend, but again, I'd like to see this really start to advance higher. We've got immediate resistance coming up in this area below, basically around the 95.03 area. We must clear that area if the dollar has any chance of moving higher. Now, when we look at gold, gold continues to fail, but it's recovered somewhat on Friday. I don't anticipate very much gains going forward in gold, as basically globally everybody starts to get ready to hike. None of that is a positive environment for gold. So selling gold this coming week into that very important critical VantagePoint T-cross long 1202 remains a reasonable play. Now, we do have some risk-off scenarios that we have to be concerned with, but overall here, guys, gold has basically been doing absolutely nothing for the last 2 months, with a very clear bias to the downside. When we look at it over a 6-month period, very, very clear downtrend. On a year-over-year, nothing much has changed there. Very, very identifiable downtrend. Now, we seem to find a little bit of a bottom down around 1160. But once again, it's more likely than not that we will retest that lower zone. Now, as we look at oil going into next week, oil still at the mercy of some of these tariffs, the conflict between the US and Iran. But in most years, oil starts to cool off going into the month of October and November. So I'm not anticipating a lot of further rallies going forward. We can see our medium-term predicted difference struggling a little bit here. Now, our key downside pivot areas on this is 70.40, 71.56, and 72.60. Very bullish close, guys, but we've been up in this area before, and each time we've come up into this area, we've made a new high. We've had a significant failure and then subsequent $4 or $5 a barrel pullback. I would be expecting that to be coming down the pipe very soon. Now, with our equity markets, we've got our equities. Finally, we've got a verified resistance zone up here. We've got a trend line in place. Now, this swing high on the equities, this could be it. This could be all we're going to see here. 29.46. The only problem is the VantagePoint long-term pivot area at 29.10 is very stubborn. You can see 3 days in a row we're bouncing off of this area. The neural index is still high, but a fantastic call on the medium term crossing the long-term predicted difference to the downside, which triggered this move lower in the equities. The problem is we can't get through this critical pivot area of VantagePoint, but it is under pressure and we are not making any new highs, which suggests the equities will start to move lower. Now, as we move into our main Forex pairs this week, Euro-US obviously is going to be a big one. Absolutely unable to break this massive resistance here right around the 118.20 mark, which I had talked about last week. And we've had a fantastic, nothing short of a spectacular failure off this level. In the live training room this week, we're shorting this thing every day into this 117.80, 117.90 mark. Ultimately, this pair gets pounded lower after they digested the Fed. We're closing 116.02, but to be very clear, guys, There is no new trend here, okay? The Euro-US pair is still overall in a downtrend, but the current range is sitting now down at this 113.15 area, the top of that about 118.30. Nothing has changed, so right now it looks like we could be moving back into that area, but the first thing we're going to have to do, if this pair has any chance of getting back into that 113 area, we must break this verified support zone sitting at 115.50. Now, as we move into the US Swiss franc, it's starting to finally recover here. Now, a lot of people with a lot of long bets on there, they're all stopped out over the last month and a half or so. But we do have a weak, and I'm going to emphasize this, guys, a weak buy signal on US Swiss franc. It is still bearish on the year, trying to turn positive again, but every time this pair has rallied higher, it is met with sellers. So right now we've already hit an overbought condition. You can see that I've drawn this in here. The last time we hit an overbought condition up in this 82 area, we had a fairly significant sell-off. Now, I'm not saying it's going to happen this time, but if equities move lower, this pair will move lower also. Now, our downside pivot, 96.93. I do anticipate that being tested potentially at the latter part of next week. This pair will be subject to sensitive, I should say, to the non-farm payroll. Now, with the pound dollar this week, once again, we have a weak sell signal on here, but there is a sell signal. A little bit of a yellow area here, which is, I'm going to call that a gray zone here, where it's trying to build momentum to the downside. But again, guys, I believe that the earlier part of this week is where the really good, even the week before last, with the medium term crossing the long term predicted difference, that's where the money was. We do have momentum building to the downside, but once again here, guys, we're not going to see, I don't think we're going to see, in my respectful opinion, a big move on this pair unless there's a Brexit announcement, or in the alternative, we're going to get that bigger move after the non-farm payroll. So right now, our upside pivot area here, we're closing the week 130.26. 131.05, guys, the VantagePoint medium-term pivot area, and 130.72. This is a critical resistance up here between 130.73 and 131.05. That is the area you want to hold out for if you're going to attempt further shorts. If we break through this area by Tuesday, then we're likely the pressure will be off the downside and we're moving higher. But right now the bias is still slightly tipped in favor of the US dollar. Now, with the US-Japan pair, it's made a good move, a bold move up here, but its upside here could be very, very limited. This area up around 114 is very, very sensitive to shorts where order flow traders are going to come in. So be careful up around this area. Right now, we've already got the medium-term trend weakening against that longer-term trend. And I will further point out we're sitting at 94.7 on the predicted RSI. We are heavily overbought, and when we combine that up against a verified resistance zone, and you can see this over the last 6 months here, pretty significant zone right here. Now we've managed to move above that, but just in the last couple of days, and the big break was on Friday. So right now, I'm not convinced that we're going into a new bull trend on the dollar yen. In my respectful opinion, we're likely to make one more push on this pair, and then we're going to reverse lower. That is the likely outcome. Now, when we look at the US-Canadian pair going into next week, this is a pair that I would be very, very cautious of. And the reason I say that is that it's headline sensitive, guys, to the NAFTA agreements, oil prices, the conflict between Canada and the US with the two political powers that are in the two countries are definitely butting heads here. So I don't have a lot of confidence in the Canadian leader. I think he's going to somehow there's going to be a problem here. It's difficult to say. I know everybody's against Trump. Some people are for him, but it takes two to tango here. So if NAFTA gets settled, guys, that's going to likely push the Canadian dollar to the US-Canadian pair lower. That is likely going to be very, very short-lived because after the fact, very little has changed. Now, this coming Friday, we've also got the payroll number coming out of Canada, the unemployment report. That is going to be a very, very critical event risk, because that is going to determine how many times the Bank of Canada, or if at all, they're going to hike rates. So watch for that employment rate. I think we're going to see a buy the rumor, sell the fact. US-Canada retraces, moves lower, and then by Friday it starts to push higher, or after the Friday's announcement it starts going the other way. So remember that with this one, guys. Very, very sensitive pair. Now, speaking of sensitive pairs, sensitive to commodities, I think this is a fantastic call from VantagePoint yet again. One of my critical strategies that I've shown in the live training room through a number of different webinars that I've done. The medium-term predicted difference crossing over a failed zone here. Now, when we look at this, we've come up. We've got a little bit of a gray area there, the yellow area of indecision. But then if the medium-term crossing the long-term predicted difference, and down we go. Now, if gold prices, copper prices, silver prices can regain their composure and move higher, and equities move higher, then Aussie US will move higher. But guys, this is absolutely a gold and stock trade. A risk on, if it's a risk on environment, Aussie goes higher. Risk off, Aussie US goes lower. Right now, we've got a top again in place at 73. We can clearly see this bottom down here around 71. So for now, guys, continue to play the range. But right now there is a clear bias to the downside. And the same thing, if we look at these two charts and I put a line in here, you can see the exact same signal here. One of the same. The one that concerns me with New Zealand, the difference between the New Zealand chart and the Aussie chart. The Aussie chart here, you can see we've broken below the 40 line on the predicted RSI, where the New Zealand one, we're bouncing off of it, suggesting there isn't a lot of downward momentum. So we could see a little bit of downward momentum, more downward momentum on Aussie than New Zealand. So if a long does turn around, then New Zealand US longs probably a little bit better than Aussie US, but both of them under pressure at the current time. So remember, guys, we've got some major event risk this week coming, starting on Wednesday with the ADP report, and then we have the non-farm payroll number out of Canada and the US on Friday. So with that said, this is the Forex Weekly Outlook for the week of October the 1st, 2008.